Picture the Wise app on your phone for a second. You've probably used it, or you know someone who has. You send money abroad, and instead of the bank taking 3% and pretending the exchange rate is just how it works, Wise shows you the real rate, charges a tiny fee, and moves the money in minutes. It sounds simple, because it is. That was always the point. Wise launched in London in 2011. Two Estonian founders, Kristo Kärman and Taavet Hinrikus, built a fintech company in Britain at a time when Britain was telling itself it was becoming the fintech capital of the world. And for a while, it looked like that story might actually be true. Wise went public on the London Stock Exchange in July 2021 in the largest tech direct listing in LSE history, valued at £8 billion at open. City commentators called it a triumph. The Chancellor at the time called it proof that London could compete with Silicon Valley and Wall Street for the companies that were actually building the future. And then, last month, Wise began trading on the Nasdaq in New York under the ticker WSE. If that does not land immediately, let me spell out what just happened. Britain spent a decade cultivating Wise, celebrated it, used it as a flagship example of what British fintech could become. And the company looked at London and New York, weighed its options, and chose New York. Not in secret, not reluctantly. Nearly 91% of Class A shareholders voted for the switch. This was not a close call. Before we go any further, if stories like this matter to you, hit subscribe right now. This channel tracks exactly these stories, and they keep getting bigger. Now let us get into what this actually means. Wise is not some hedge fund chasing tax advantages. It is a real company with real customers processing real transactions. In the financial year ending March 2025, Wise handled over $197 billion in cross-border volume. It has 15.5 million active customers. Revenue grew 16% year on year. This is a healthy, profitable, growing British fintech business, the kind of company that politicians hold up in speeches as proof that Britain is open for business, and it chose to anchor itself to New York. So what was the logic? Listen to what Wise's own Chief Financial Officer, Emmanuel Thomasin, said when explaining the move. He pointed to access to the world's deepest and most liquid capital market, greater visibility among US customers, and the largest pool of global investors. None of those phrases are about tax. None of them are about regulation. They are about something more fundamental. When a company reaches Wise's size and ambition, the London Stock Exchange simply cannot give it what the Nasdaq can. The analyst coverage is thinner, the institutional investor base is smaller, and the path to inclusion in the major US indices, the S&P 500, the indices that trigger automatic buying from pension funds and passive investors around the world, that path does not run through the City of London. That is the real problem, and it is not new. Wise is just the latest name on a list that has been getting longer for years. Arm Holdings, Britain's most celebrated semiconductor company, chose the Nasdaq for its IPO in 2023. CRH, the building materials giant, delisted from London entirely after moving its primary listing to New York. Ashtead, an $18.5 billion equipment rental company, is moving to New York. Flutter, the sports betting company, moved its primary listing to New York in 2024 and is now considering dropping London altogether. Darktrace, the British cybersecurity firm, left the public markets after a £4.3 billion acquisition. Just Eat moved to Amsterdam. TUI moved to Frankfurt. More than $100 billion in market capitalization has migrated away from the London Stock Exchange in the past 5 years alone. And now Revolut, valued at $75 billion after a 2025 secondary share sale and widely considered the crown jewel of British fintech, has confirmed its IPO will be on the Nasdaq, not London, the company that could have been London's defining listing of this decade, and it is not coming here. The pattern is consistent and brutal. Companies build themselves in London. They grow. They reach a scale where London cannot provide the liquidity, the analyst coverage, or the valuation multiples that their shareholders expect. And they leave. Wise is not an outlier. Wise is the rule. Now let's talk about Rachel Reeves, because this is where the story gets genuinely uncomfortable. In January 2026, the Chancellor was due to give a speech at the London Stock Exchange, marking the introduction of new capital markets rules. The speech was supposed to say that critics of the city were wrong, that the new regulations were reinvigorating London as a financial centre, that the tide was turning. She actually had to cancel the appearance at the last minute to deal with a foreign policy emergency. But the speech was released anyway. Her prepared remarks said, and this is real, 2 years ago, some said the city's best days were behind it. They were wrong. Wise debuted on the Nasdaq 4 months later. You genuinely cannot make this up. And look, the new listing rules are not nothing. Lowering costs for companies seeking to raise capital matters at the margins. But here is the structural problem that no rule change can fix. London cannot offer index inclusion in the world's most powerful passive investment vehicles. The S&P 500, the Russell indices, the major US benchmarks that drive hundreds of billions in automatic buying every quarter. That is not a regulatory problem. That is geography and market depth. And it is why companies like Wise will keep making the same calculation until something fundamental changes about how British capital markets work. If you are finding this useful, please like this video right now. It genuinely helps more people find this content. And these conversations need to be louder, not quieter. Think about what this means for people who are not executives. When Wise's primary listing moves to New York, the center of gravity of the business shifts. The analysts covering the stock are in New York. The major institutional investors holding the shares are in New York. The media cycle around Wise's earnings, its strategic decisions, its growth story, that all gravitates toward New York. British workers at Wise are not all losing their jobs, but the company's identity, its financial home, its relationship with the capital markets, that is American now. Britain built it. America owns the conversation about it. And there is something else nobody is saying loudly enough. Revolut is next. A $75 billion company that could have been London's answer to every critic who said Britain cannot produce world-class fintech. It is listing in New York. When that happens, and it will happen, the conversation about London's capital markets will get a lot harder to spin. Here is the bottom line. Wise's move to the Nasdaq is not a betrayal. It is a rational decision made by a board of directors who are legally obligated to act in their shareholders' best interests. London could not offer what New York could offer. End of story. The problem is not wise. The problem is that this story keeps repeating itself, and the response from Westminster keeps running about 3 years behind the reality. The Chancellor says the city's critics were wrong. The companies leaving say otherwise. And they are voting with their listings, their capital, and their futures. Drop a comment and tell me if you think London can actually turn this around, or if this is just the new normal. Subscribe if you are not already, because next week we are covering another British institution making the same calculation, and you are going to want to see that one. Hit the notification bell so you do not miss it. I will see you then.